All right, gang, it is Friday evening Pacific time. I am on the west coast of the United States, reeling from an insane week of politics, an insane week of macro news. I just got back from Jackson Hole, Wyoming. I'll bring you all the latest updates from Chairman Powell's comments and everything I learned on the ground there. Some amazing technology updates this week. So let's get into it, gang. It is time for Money Talks. Okay, so first on the docket, we've got an amazing episode for you, but we're going to get right into politics. Politics is not my favorite topic, but as you know, we're in a very precarious situation here. If you care about any kind of libertarian values, as I do, we have been under attack for years at this point in the crypto space, now in the AI space, basically technology, entrepreneurship, and as you'll see in a few minutes, basically your very freedoms as it relates to taxes are under attack by the so-called Democratic Party. And it really pains me to say this as somebody who has voted Democrat in the past. But the writing's on the wall, folks. All right, let's dig in. So the first crazy harebrained scheme idea that we need to debunk is this idea of taxing unrealized capital gains. So this week, in their infinite wisdom, the Democratic powers that be convinced presidential candidate Kamala Harris to begin to speak publicly and actually enunciate an economic plan. And immediately upon doing that, she dropped in the polls because the public clearly saw through the BS in this idea. The first idea being this idea of unrealized capital gains. Well, let's break that down. What does that mean? When you own an asset, in the United States, I'm speaking specifically, most countries are similar, but if in the United States you own an asset and you sell that asset for a profit versus what you paid for it, you pay tax on the difference. That difference between what you sell something for and what you paid for it are referred to as capital gains if you're selling an asset. And you generally pay taxes on those capital gains. Now, that all makes sense. I mean, well, if you understand the history of taxes, you may say that all makes sense. Some of you may not, but we'll leave that aside and maybe a discussion for another day. But what doesn't make sense is if you haven't sold something that you bought, that you would end up having to pay taxes on it before you sell it. And that's referred to as unrealized capital gains, or in this case, pay taxes on unrealized capital gains. So as an example, let's say you bought 100 shares of stock in 2020 for $75 a share. And at the end of the year, the stock is $350 per share, but you didn't sell. So your unrealized gain is $27,000, or close to $28,000 actually. Under Kamala Harris's plan, you would owe nearly $7,000 in taxes, which is 25% of the $28,000, but you didn't sell, so you actually don't have the cash. So you actually have to pay taxes out of your savings on an asset that you didn't actually sell, okay? But now you continue to hold until August of 2024, let's say, and finally you sell for $60 per share because the stock falls and it falls underneath the asking the price you paid for it. So in this case, you actually lost $1,500 on the stock, plus you paid the taxes on the $27.5 thousand of gains you never actually received since those gains evaporated. So the initial tax proposal is theoretically only targeting 100 million plus in capital gain sales, but that's just the start. It opens the gates to lower the threshold whenever they choose. And everyone is going to end up having to pay in this model. It's unconstitutional. It makes no sense. It will never stand up to scrutiny. It's the most insane idea I've ever seen. This idea of having to value something you haven't sold just makes no sense. An unrealized capital gain is a meaningless idea. It is actually a row in a database. You can just make it up. My house is worth $1. My house is worth $5 million. That's my pipe dream. So I just made it up. right? So how are they going to decide what these unrealized capital gains actually are? I have no idea, but the idea is terrible, and I predict it's going nowhere very fast. Okay, so that's harebrained scheme number one. And there are others, and I'm not going to get too far into them. Supposedly, they're making outreaches to our world, the crypto world. They held an online meeting of the crypto community that is kind of Democrat friendly. There wasn't a single real corporate representative in all of these people. Honestly, most of the people I never heard of in this meeting that they supposedly had to do a big reset between the Harris world and the crypto community. And anything they say makes no sense to me because they're in power now. She can go to Elizabeth Warren, to President Biden, and say, correctly, this is affecting my chances to be elected president. We need to fix this now. And they've explicitly chosen not to do that because they have no idea what to do. Elizabeth Warren has effectively been running banking and by proxy crypto policy at the federal level in the United States for the last 4 years. And it has been an unmitigated disaster, as you all know. Okay, so we'll see where this goes in the coming weeks. We're less than 2 months or 2 months-ish away plus from the election. And it's going to be very, very close. There's a lot of people that don't understand these micro and macroeconomic issues. A lot of them vote based on emotional issues. This is not an emotional issue to me. This is a hardcore libertarian do or die presidential election as far as I'm concerned. Okay? We have past the point of no return when it comes to the debt burden of this country, and we'll come to that in a couple of minutes. So I don't know if we can be saved from that perspective, but from a freedom and libertarian perspective, something has to give here. Okay. To that end, in the last few hours, Robert Kennedy has dropped out of the presidential race and actually endorsed President Trump. He basically said he's throwing his support behind President Trump. He made some comments that ripped the Democratic Party to shreds during his speech where he came out in favor of President Trump. He said Democrats once stood against authoritarianism, against censorship, against colonialism, against imperialism, against unjust wars. And in every single one of those instances, it was no longer true. The Democrats used to be the party of labor of the working class. The Democrats were the party of government transparency and the champions of the environment. The Democratic Party was once the bulwark against big money interests, corporate power. I saw, I think it was Mario Cuomo on television railing against his own party as well, pointing to all the booths at the convention that were being sold for between $600,000 and a couple of $1 million apiece. Clearly, the party of big money and big interests, if that's what they're selling these booths for. So, which I don't mind, just don't be a hypocrite about it. Okay, so kudos to Kennedy for speaking truth to power as it relates to the current state of the disaster of the Democratic Party. I want a functioning multi-party system in this country. I want a party that stands for things that I don't believe. Now, we would say, Bill, that makes no sense. Well, how can we have just debates in this country if we end up as a uniparty system, right? Effectively, we have a single party system of big spenders who will just print money ad nauseum, okay, and effectively not care who pays the bill in 50, 100 years, right? Now, that's both parties, Democrat and Republican. However, when it comes to freedom, the Democrats have clearly lost the plot. And I really applaud RFK Jr. for taking a stance here. And I am sad that he has had, can't afford to run a viable campaign, but I hope that he can knock some sense into some folks that don't really understand what's going on. You may remember that RFK Jr. made headlines a few weeks ago at the Bitcoin 2024 conference in Nashville. During his keynote, he said that if he became president, he would direct the U.S. Treasury to buy 550 Bitcoin per day until a reserve of at least 4 million Bitcoin had been acquired. That would represent approximately, 1/5 or 20% of all Bitcoin currently in circulation, and more than that if you factor in the fact that Satoshi's Bitcoins are probably lost, and then a whole bunch of other Bitcoin are probably lost as well. So that would equal probably close to $300 billion in today's value of Bitcoin, which would be an astounding number. I don't know if this could be pulled off. Trump does support the idea of a strategic Bitcoin reserve, which I obviously also support, but at the same time, we have to be realistic that acquiring 4 to 5 million Bitcoin is probably untenable anytime soon. Okay, speaking of politics and crypto, so Public Citizen released a really interesting report earlier this week stating that big crypto was effectively spending far more than any other group of companies to influence the current election. All right. Crypto corporations have spent an unprecedented $120 million influencing 2024 elections. Most of that money is in a nonpartisan super PAC dedicated to electing pro-crypto candidates and defeating crypto skeptics. So if you think that this space isn't real, if you think this space isn't here to stay and that we aren't going to fight back against the powers that be that have been hammering us into the ground for years to try to kill this idea of internet money that is free for all, that is separate from government influence, that can't be bought, sold, that is completely decentralized with no off switch, then you are delusional. We are not going anywhere. We are all doubling down, and we are beginning to exert our influence on this campaign. And it is working. It is really working. And this is a big deal, folks. In my humble opinion, okay, and I said this on Peter Diamandis' show last week, Moonshots. Go watch it. It was a really fun episode. Thanks, Peter, for having me on. I believe that crypto's influence on the upcoming elections could amount to 4 to 5 percentage points. Now, let me explain that because some of you are probably rolling your eyes at me right now. Now, 50 million Americans hold crypto of some amount. Now, some of it's small, right? $150, $200. Some of it's tens of thousands, hundreds of thousands. Some of it is a meaningful percentage of those holders' net worth in the aggregate, okay? And many of those people don't just buy it because it's number go up technology, but because they believe in this ethos of money that is free of government influence, that can't be inflated to zero in value, that is borderless, is always on 24/7, works over the internet, et cetera, okay? And there are a lot more of us than there are of the people who would just assume that we keep our finger on the print button all day. And these people are starting to exert their influence on elections, which is why the Super PAC has raised close to $120 million to date. Now, when you add up all those people and factor in the number of them that genuinely care about this issue when it comes to how they might vote in an election, and factor out the people that would probably vote Republican anyway, my guess is that there's up to 4 to 5 percentage points of people who can be swayed based upon something close or resembling this issue or this issue combined with other technology issues. That is a massive, massive voting block that is being completely underestimated by, actually it's being underestimated by both parties, but especially by the Democratic Party. I'll give Trump some props for actually starting to listen on this topic, and he spent time with several executives in my world in the crypto space, and I really do believe he's been listening in this regard. It's been kind of refreshing to see, okay? So we'll see. Crazy week on the political front. It's going to get crazier, folks. The lies, the innuendo. You want to know when a politician is lying? Well, when they're opening their mouths, okay? And so I hate to say it, I've got friends who are politicians, but they just can't help themselves. So just wait. It's going to be a crazy couple of months, all right? All right, so as I mentioned before, I just came back from Jackson Hole, Wyoming, had a fantastic time. Thank you to my friends at SALT for organizing the event. It overlaps with the Fed conference. At the conference today, Chairman Powell made some comments in regards to interest rates. We'll come back to that in a second. I want to tee this up with some announcement that came out earlier in the week 2 days ago. It was announced that the Fed had overstated its, or I should say the government had been overstating its reported job gains by over 800,000 in the prior 12-month period. Now, not only did that represent a massive downward benchmark revision, which is the second largest on record, it's on top of the existing downward revision to the initial monthly job reports and figures. Between all the individual job revisions, job growth for the 12-month period was wildly, crazily overestimated by almost 1.2 million jobs. Now, do you really believe, would you have me believe, that they just had bad data, they don't know how to estimate, they don't know how to add? I don't know, but it really reeks to me of either gross incompetence or somebody decided to make up these numbers to suit their end. And if you've been paying attention to anything I've been saying for the last couple of years on Twitter Spaces, press interviews, online, whatever, you know that I have zero faith that the government has been reporting accurate data as it relates to job reports. I believe they've been making the numbers up. I believe they've been tweaking the variables to suit their purposes. And you know, the genie's out of the bottle and everybody's onto them now. Okay. Now, that having been said, this weak job report or these revisions, which are a disaster, basically have opened the door for the Fed to start lowering interest rates. So today, Powell delivered his yearly Jackson Hole address, and he basically delivered an official pivot. His mission was very clear. It was like mission accomplished. He said explicitly, the balance of risks to our mandate has changed. We do not welcome further cooling in labor market conditions. We will do everything we can to support a strong labor market. The policy rate level gives ample room to respond to risks. In English, this means the Fed is going to start cutting, and they're probably going to cut big. Okay, this has already been generally priced into the markets, right? However, given the comments this morning, the new information is that the market is increasing the odds of a 50 basis points or half a percentage point rate cut in September. The market was counting on a 25 basis point rate cut in September. Okay, and I think it's in 2 weeks we get the payroll update, and that should give us an indication as to how bad things have really gotten. Okay, if the payroll report in early September is really bad, I think we're going to get 50 basis points. If the payroll report is close to expectations, we'll probably get 25 basis points. More important than any of that is that global market liquidity is increasing at a rapid clip. Okay, and this is, it's just barely getting started, to be clear, right? But there's no mistaking that global liquidity is rising sharply. Global liquidity rose again this week and reached a new all-time high. Central bank liquidity is turning higher. The PBOC, the People's Bank of China, is leading the way on this. Fed liquidity has stabilized. The typical seasonal downsizing in the general treasury account is also manifesting. Collateral values continue to improve. Volatility has picked up a tad. We had a couple of crazy days in August. This is likely a feature of just thinner trading in the holiday period. I don't know for sure, but that's my impression. And all in all, the prospects for global liquidity in the second half are looking pretty good, right? And so in other words, the Fed's got its finger on the print button. It's warming up the machine, and it's waiting for that machine to get ready to rip. Okay, so I predict, once the liquidity is in, full steam, it's going to be full steam ahead for risk-on assets. Now, as I've told you before, my key kind of yardstick for liquidity from the U.S. perspective versus other markets is the DXY, which is the U.S. dollar index. It's effectively a measure of the dollar's worth versus other currencies. The more dollars in circulation versus other currencies, the lower the DXY. So in other words, as liquidity increases, the value of the dollar should decrease if we're increasing liquidity at a faster rate than other markets, which I believe we are now, and the markets are pricing in. The DXY effectively collapsed this week, and I believe it was below $100 or close to $100. It was about $103 a couple of weeks ago. And now in crypto terms, a 3% move is not a big deal. In dollar terms, it's a very big deal. Okay, for the DXY to collapse like this, it's a very big deal. Now, this all leads to the bond markets. And as I've told you before, The bond markets here drive everything, right? It's interest rates that drive the economy. It's bond markets that, basically tell the world, what does the U.S.'s balance sheet look like? Is the U.S. solvent? The U.S. is not solvent, by the way, and we'll get into that in a second, all right? My friend Dan Moorhead, also an investor in Abra, had a fantastic post earlier this week. He said, in his opinion, equities are still overvalued relative to bonds. Okay, you can't have record high yields, right, 4.5 to 5.5% at the same time as record high equities. It makes no sense. So the equity risk premium had actually gotten negative, right, which means it really doesn't make a lot of sense, depending upon where you stand in that risk curve, to be holding equities given the bond yields. So something had to give. Either bonds have to go up in price or stocks down, or both. It's happening now, right? So I predict that in the very short term, meaning over the next 18 to 24 months, we're going to see a big spike in bond prices as yields start to come down. Now, it's possible that equities continue to rise in that environment. They just may not be rising as fast as bond prices are rising, okay? And as yields come down, okay? Again, this is a big deal. This is what drives everything. It acts as the big liquidity suck for risk on assets. It's what's going to provide, the number go up for crypto, especially as the government keeps its finger on the print button. Now, while I think that there is going to be a let's call it an 18 to 24 month on bond prices. I tweeted that I think fixed income is going to have a very good 2025. I think that the U.S. government debt market collapse has actually started. So I think that we're going to see a spike, right? Not back to the long-term trend line in bond prices, which were, up and to the right for 40 years, but it's going to have a little spike, and then the collapse is going to begin. All right, and let me explain what I mean by that. So U.S. government bonds broke below their 40-year uptrend right at the end of COVID, when the government was forced to raise interest rates. And remember, bond prices move opposite of yields. Yields go up, right? Bond prices go down. Bond prices go bond yields go down. Bond prices go up. So U.S. government bonds have broken below their 40-year uptrend after experiencing one of the most aggressive bear markets since the 1980s, right? Now, Treasury bonds would typically have been 40% of an investor's portfolio, right? This has led to significant losses because of their sharp decline as interest rates were going up. So since March of 2020, gold has far outperformed Treasury bonds by 100% amid surging government spending, but most people don't hold gold or a significant amount of gold in their investment portfolio. So certainly nothing enough to even come close to offsetting the losses from a 40% bond portfolio, right? So government expenditures have risen from $3.4 trillion to almost $4 trillion in just 2 years. We have a sickness. We are addicted to spending in this country. And so constantly rising government spending financed by issuing more treasury bonds is a big problem. This has caused bond prices to drop significantly, right? Treasury bond issuance in 2024 is expected to hit almost $2 trillion, about $1.9 trillion. This level is higher than even the peak of the 2008 financial crisis. The 2008 financial crisis appears to be like so far in the past and a small issue compared to what's happening now. So like I said a couple of minutes ago, although we expect a bounce in bonds as the Fed starts to lower rates, my personal long-term outlook on the bond market in the U.S. is super bearish. I think it's a disaster waiting to happen. You can't keep printing money, keep issuing more debt, and expect the world to finance that debt at ever lower rates. It makes no sense. If you were broke and you needed to borrow money, right, the rates you would have to pay to borrow that money are going to be very high, right? The U.S. has been playing a con game trying to convince the world that it should finance the debt at a lower rate because we would never default on our debt, okay? And the reason that we haven't been defaulting on our debt is that unlike you or I, who would have no choice, we either pay the debt or we default, the U.S. can actually devalue the loan by printing more money. You and I can't do that. Okay, but the game is almost up, right? So a key factor that's driving this long-term breakdown in treasury bonds is the decline in labor force participation rate. This metric has shown a strong negative correlation to government debt since 1999, right? The productivity just isn't there if the number of people in the workforce is decreasing. The decreasing labor force participation plus increasing government debt indicate economic strain. It's kind of common sense, right? Who's doing the work? This is because of more people retiring and fewer people working. The combination has required the government to increase its spending. Now, I've heard a lot of people, I've talked about it myself, say, well, wait a minute, we've got, and I'm going to talk about figure and robots in a minute. What about AI and robotic-based productivity? Couldn't it get us out of this mess? Well, yes, it could, but should we be counting on that? Should we assume that we can spend ad nauseum and we'll be able to pay back that debt because we're going to have a productivity boom? Is that the responsible thing to do? Of course not. Now, with the aging U.S. population and more people retiring, labor force participation is likely to decline even further. This would increase government debt even more unless spending changes. That's why gold has been super bullish lately and has surged 35% over the last 9 months or so, right? And anyway, so we'll spend more time on this. I want to actually end. Look, it's not all doom and gloom, right? I think that with what's happening in the technology world of crypto, the technology world of AI. We're going to talk about the new AI-based iPhone in a second. I think that there's a lot of reason for hope. I really do. I'm super bullish on our future globally, in the U.S., politics aside, money printing aside. I am more bullish than I've ever been. Okay, and you may say to yourself, "Well, Bill, how do you reconcile the fact that you're so angry about the government's printing of money?" Versus the technology boom that's coming that has the potential not only to get us out of this and save us, but is potentially about to reach escape velocity in terms of the technology singularity, the longevity singularity. And look, we have no choice, folks, right? I mean, we're not just going to roll over and die because the government has been printing money irresponsibly for 30 years. We're going to do what we always do. We innovate as a species. All right. So let me start off with some crypto updates, and then I want to talk about AI, and then and we'll talk about the new iPhone as well. Super exciting what I'm seeing here. So Solana, we got to talk about Solana. Solana surpassed all first or L1 blockchains combined. Like all of them together in terms of trading volume on DEXs yesterday. That was just awesome. Over $5.5 billion in DEX trading volume. Ethereum was a far distant second with sub $900 million in volume. But all of the L1s are up in volume, right? So in other words, weekly DEX trading volume on the top 5 blockchains, including Ethereum, Solana, and even layer 2s like Arbitrum, has grown from 20 billion a week at the start of the year to over 40 billion per week today, right? That's awesome. Now, there was a peak in March, partially because of the meme coin craze of 60 billion. That was kind of a one-time peak. But if you look at the numbers minus that blip in March, it's really been up and to the right since last fall in terms of overall DEX trading volume, which is super, super bullish. Look, folks, it's working, right? Crypto, smart contracts, it's working. I look at what's happening with Solana right now as kind of a global test for the future of banking, because I think retail banking is going to run on Solana. I think institutional banking, which I heard a lot about this week at the Jackson Hole conference, is going to run on Ethereum. And they're going to exist and coexist side by side. And they're going to use this bridge technology to move assets back and forth. So all good. NFTs appear to be back, right? 3 million in daily NFT sales, up 42% in the last 24 hours on Solana, up 25% in the last 24 hours on Polygon, even on Bitcoin, 2 million a day in NFT sales. So I don't spend a lot of time on the NFT front, but it's interesting that it's back. So I got to talk about AI and the iPhone. I think we're pretty close to the iPhone 16 announcement. I think it's in early September. I'm really excited about this. This is the first AI phone, right? The iPhone is going to have ChatGPT directly integrated. So basically, when you use Siri, it's going to be a completely new experience. If you've never tried the voice integration with the ChatGPT app, you should try it because it'll give you some indication of what I'm talking about. I use it all the time. If I'm driving, I actually have a conversation with it. Right, especially if it's after hours, and a lot of times in the car I'll call a friend, and for whatever reason I can't, I'll actually have a conversation with ChatGPT. It's amazing. I've had conversations like, I want to help a friend, and you're my therapist guide. I'm thinking through some leadership issues in the company, and you're my Harvard MBA McKinsey consultant, and I just have these conversations constantly. But now this level of artificial intelligence is coming directly to the iPhone at the Siri OS level, so you'll be able to do everything from, just direct your iPhone to make reservations, dinner reservations, give you personal advice, give you dating advice, talk about how you should organize your vacation that you're planning. I love it. Super excited about the iPhone 16. I haven't been excited about an iPhone release or an Android phone release in probably 3 or 4 years, if not longer, except maybe for the camera and the battery, whatever. I get a new phone every couple of years now. I don't even remember. I think I might be 2 or 3 versions behind. But this one I'm actually excited about because I am a big user and believer in AI. I think we're in for a massive productivity boom. Bigger than the enterprise software boom we had in the early to mid 90s, driven by database technology like Oracle and others. This is going to be even bigger in my opinion. And it's coming to the consumer now with the new versions of iOS and Android. And I'm really excited about it. Now that's a good segue into Figure. If you didn't see Peter Diamandis' interview with the CEO of Figure, the robotic company, go check it out. They demoed Figure 2. It's basically, by the way, Figure raised several $100 million, including an investment from OpenAI, the company that makes ChatGPT. So I'm pretty sure that we're going to basically see this humanoid robot that effectively has full global LLM, large language model integration, which in English means it's going to basically converse with you and act like a human, and basically take commands like, oh, pick up this box, or pick up, those of you who can't see me, pick up this apple. It will literally reach down and pick up the apple and interpret what you're saying, not just because it knows certain commands, but because it has full artificial intelligence capabilities integrated. But it's also the first kind of AI-powered humanoid robot that I've ever seen that is versatile and can handle real-world applications. Now, keep in mind that Tesla's working on this. I believe Amazon is working on this. Obviously they probably have more robots in their warehouses than any other company in the U.S. Of course, all of this is dwarfed by China. China has more robots than we have people. It is absolutely insane how far ahead of us they are in terms of deployed robots. They may not be ahead of us in terms of AI development and humanoid robot design, but my guess is it's going to be a kind of a fight to the death, and I mean that more in proverbial terms, not in explicit terms. I think we'll work out our issues with China over time, and it will be a fight around money and issues, not a fight on the battlefield. At least that's my belief, and I think crypto and AI and robotics will play a big part in making sure that we don't end up in World War III. Anyway, congrats to the team at Figure on the fundraise. I think it was $600 to $700 million. Congrats on the progress on Figure 2. Super excited about where we're going with iPhone 16. Great week for crypto. Between the Jackson Hole News conference, which was awesome, the increase in volume that I'm seeing on the DEXs and Solana. We're seeing an increase in volume at Abra on our registered investment advisor. It's fantastic, and so we're excited about where the markets are headed. It's going to be a crazy couple of weeks. We'll bring you everything as it happens right here on Money Talks. This show is for you, our clients, and we do it for you. So Let us know what you like, what you don't like, and we'll modify the show accordingly. In the meantime, have a fantastic week, and we'll see you right here next week on Money Talks. Take care, everyone.